Alright guys, so I want to make this video, don't know if it's going to be short or long, but basically just to talk about what's going on in the US right now and market, economy, all-time highs that we're hitting seemingly every day, and what's going to happen, elections. Anyway, so 2 days ago, and it's not news for most of you, there was an attempt on the likely president-elect of this cycle, 2024. Basically, a guy tried to kill Trump, missed, and killed a bystander, and there were a couple guys wounded. So anyway, we live in a free society, and supposedly we're supposed to be civilized, because if these things are allowed to happen, then our country will turn into a third world nation. And I know from experience that that's not something we want, and I'll talk about it in a second. But basically, right after this happens, there's like not an outrage, but a barrage of left-wing people, so to say, saying that, what a terrible thing, how did this guy miss? And they're hoping next time, the next guy will actually be a better shot. like, are we living in in a third world country with no electricity, where this happens every other day? I mean, so the left says that, ultra right-wing people, blah blah blah, this and that, and I'm sure there is a bunch of people who would say that, maybe an attempt on Biden should have been made. But those are fringe people, however, you go on X, and this guy, he just stood out to me. He's a senior program management manager at Uber. Now, I don't know if this is real or fake. I didn't go to check his profile. He probably deleted this if this is real, but check this out. It's a shame they missed. Better luck next time. If we're lucky, the next guy is a better shot. I mean, and I understand there's people in their 20s who would say that, and there's a lot of them. It's insane. Just go to Libs of TikTok, and you'll see a lot of them saying that. But this guy, he's he's not 20 something. He's a senior product manager at Uber, an adult, saying this kind of stuff. Basically calling for somebody else to make an attempt on President Trump, or candidate Trump. It's completely insane. Are we living in some in the 18th century, in the 12th century, when people just got killed? I mean, so I don't know if you guessed it or not, but I'm from Russia. Probably my accent gives it away, but this is exactly what happens in Russia. And I actually pulled up some links to show you that it actually happens, and we really don't want to live in a society like that. I'm not making this video political, just kind of an introduction. So when I was a kid, this guy Alexander Lebed, he was a very likely winner of the elections against Yeltsin. That was in the 2000 election cycle, I think, and he mysteriously died in a helicopter crash. Okay, moving on. Here's a list of this guy. He was a perpetual candidate, Boris Nemtsov, perpetual candidate for president, and got killed in 2015, supposedly by thugs, but political opponents of Putin do not die by mysterious death. It's almost a fact. I'm not making any conspiracy theories, but in Russia everybody believes he was killed by Putin's people. And then most recent, Navalny, and without sounding inappropriate, I'll say it like Mr. Obama said it about Boston police. So Navalny acted stupidly. There was an attempt on his life in Russia. They tried to poison him, and then they rushed him to Germany, where he was saved. And after that, he went back to Russia. He got warned. There was an attempt on him. Why would you go back to Russia? So he got back. He went back, and they whacked him in jail. But whatever. He acted stupidly. I'm sorry. Why did he go? But so here's an article. It's not exactly what I was looking for, but these are the people who opposed, the ruling party and were killed in Russia. So most recent, Prigozhin, he I'm not gonna go into the whole detail, but supposedly crashed in his private jet. Okay, this guy, I actually don't know him because I already left Russia by then, but was a political leader of anti-Kremlin party and got shot in front of his house. This one, I was actually still in Russia. I remember this. She was quite popular. Not probably wouldn't get elected as a president, but she was a leader of opposition, and she was a journalist, and got killed. So Litvinenko, he was a he was a KGB guy, and he was killed in London with radioactive stuff. This lady I don't know, and this guy I don't know, don't remember. But yeah, but his name SOFI, I remember him. He was, he was in opposition. He was in the parliament, and then 2015 he gets killed. Anyway, what I'm saying is that if we allow this kind of rhetoric in our country, then we turn into Russia, and supposedly we are fighting against the Russian influence and what's going on over there, and them attacking Ukraine and whatnot. But the people on the left are basically promoting this stuff, and I'm not calling out any names. Again, I'm not saying this guy actually posted this. This could be a fake, but if it's real, it's super disturbing. In any case, so what I wanted to talk about next is Trump survived. Today he announced his VP running mate. Don't know anything about the guy, don't really care. But what's interesting, and why I said that there was an attempt on a presumed winner of the elections, I mean, guys, look at this. Now, this is a betting website, but usually, it's probably more accurate than the polling, because people here actually put up their money where their mouth is, and Trump is basically getting about 68% of the potential chance to win the election, unless there is another attempt on him, God forbid. Anyway, so let's I wanted to take a quick look at the polling right now. Actually, before we look at the elections polls, I want to just quickly show you the front page of New York Times. So the attempt on Trump's life was made just 2 days ago. Today's Monday and it was Saturday. And check this out. There's not a single story basically on the front page about attempt on the presumed winner of the elections. Like, we have a burning shed, we have somebody meditating, some guy with an RPG, sports, food, more sports, more food. Not a word about an attempt on the presidential candidate. Like, this is just insane. But anyway, so 538. So who is ahead in the national polls now? I know this hasn't been updated, but actually no, this is today's. So they're still saying that Trump is merely ahead by 2.3%. Like, are you serious? Like, let's take a look at these two videos, and you tell me if people in their right minds would actually vote for Biden. Now, I'm not saying vote Democrat or Republican. I'm just saying that, like, Biden is not a viable candidate. Just take a look. You probably have seen it, but I have to show it.
I wouldn't have picked Vice President Trump to be vice president, so I think she was not qualified to be president. And now I want to hand it over to the president of Ukraine, who has as much courage as he has determination. Ladies and gentlemen, President Putin.
Anyway, I want to end the political part of this video. Guys, we just need to be more civil and definitely not call for violence. That's completely inappropriate. It's just a wrong path for our country. So anyway, so after the attempt on Trump, basically everybody now, or most people, presume that he will win the election. And today was the first day in the market after the assassination attempt, and S&P 500 today makes an all-time high, which it seems to make every other day. Basically 5,647 points on the S&P 500, or 564.73 on the SPY. And let's take a look at the fear and greed index. We're sitting in a greed territory. We've been in the fear to neutral the last couple of weeks, but and then before that we've basically been in extreme greed for a couple months. We're back in the greed, and everything is looking great. And to be honest with you, while I think we'll have a bad recession, and I'll talk about it, I think after the attempt on Trump and the likely cutting of the rates by the Federal Reserve, I think in the next couple of months, at least until the elections, the market is going to roar. The IWM broke out of a long-time trend. Let me show you. So IWM is the ETF that represents Russell 2000, or like small caps, and you can see it made all-time high in November of 2021, and ever since then it's been going down, and this is the highest close for IWM since then. Essentially, like, maybe it was a little bit higher over here in December, but since that peak in November of 2021, this is the highest point, and it's likely to keep going up for a while. And same thing probably will happen to S&P 500. Just take a look at it. 25% for the year, and actually for the 2 years it's up 50%. It's completely ridiculous, but let's take a look at it. Okay, so I loaded a CHD here, but the point is to show SPY or S&P 500. And basically in the last 2 years it's up 50.5%. we're not here concerned with the CHD. I just made a video about it, but anyway, so it's going up by 25% per year. Like, how long do you think this will continue? I don't know. It will probably go up from here for another few months, but eventually I think it will end, and it will end pretty badly. And guys, like, I remember 2008, 2009, and back then Dow Jones was jumping by like almost 1,000 points a day right before the elections. It was quite funny to watch. I didn't have any money to invest. And then in 2009 I wished I would buy Google, but whatever, it's a story for a different time. But anyway, I think in the near term, because of all the enthusiasm about rate cuts and Trump likely becoming a president, he's friendly to crypto and he's pro-business, and a lot of CEOs right now, they're like, yeah, if Trump becomes president, it will be better for business, whatever. Anyway, so the market will probably run up. However, there is another side to this whole, bull run thing, and that's reality. So let's take a look at reality. So basically, as far as treasury rates go, today we had a situation where a 30-year versus 2-year rates, the yield curve has uninverted. So for the last year, the 2-year yields were above 30-year yields, because people were thinking that short term the rates are going to stay higher, and long term they didn't want to invest it. And usually, if you look at this 10-year minus 2-year, as you can see, when the yield curve goes inverted, meaning the long term treasuries yield less than the short term, basically it is saying that we are going to have a recession at some point soon. But then when the yield uninverts, every time it uninverted, there was a recession. And this is a Federal Reserve website, basically going back to 1976. It was uninverted, there is a recession. Inverted right here, recession. Inverted, recession, when it uninverts. Then in the 1990, it uninverted, and then a few months later, recession. 2020, it was inverted, then it uninverts, recession. Over here, in 2008, great financial crisis, inverted, then uninverts, and we have a big recession. So I'm not saying we can exactly say when the recession will hit, and we're still inverted on the 10 minus 2, but it's getting close. Basically right now we're sitting at a mere 0.21% difference. So it's getting really close to inverting, and over here it was basically a year ago it was a full percentage point. So we're getting really close to an inversion, and usually, this has never failed, at least as far as the data we have. It was always followed by a recession. The uninversion of the yield curve was always followed by a recession. And the longer dated, the 30-year treasury, uninverted today, it's now above the 2-year treasury. And I'm not an expert on it, and if you want to know more about it, so Rebel Capitalist George Gammon, he made a really good video about it, so I'm going to link it in the description below. But let me just basically, he explains here the mechanics of inversion and non-inversion and what leads to what. So I recommend that you watch this video. The reason why I recommend this, because we're investors, we want to make money, and I think it's important to know what's going on. So anyway, now let's take a look at another thing, and that's national debt and all of that good stuff. So next I want to talk about national debt, and we're sitting at almost $35 trillion right now, and it's ever growing. And here is the US federal tax revenue, so just under $5 trillion per year, and the federal budget, this is the official, almost $7 trillion, and so that makes the official budget deficit of almost $2 trillion, 1.858. Okay, however, the actual deficit is $2 trillion, guys. That's per year. So we're spending about 35, almost 40%, about 40% more than we're collecting in taxes, and this is unsustainable, to say the least. Okay, and so what I want to show you next is this statement from treasury.gov, and these are the spendings, and this is surplus, basically all the revenues that the government collects and all the spendings they have, and this is for June. So basically what we see right here is net interest right here, $81 billion per year. guys. If we multiply that by 12, that's about well, let's actually multiply it by 12. So 81 times 12. So that's almost $1 trillion that they pay just in interest. That's 972 if they keep going at this rate. Okay, and this may look like, okay, whatever, 81 billion, whatever that means, but so you understand, government spends less on healthcare, national defense. They spend less money on those huge budget items. They just give away the money in the net interest, and they keep borrowing, so the net interest they have to pay each month is growing as well as the spending is growing. Okay, so here's the also from treasury.gov fiscal data, treasury.gov. Let's zoom in so you can see better. So these are the line items, and this is since January 1st of 24. Okay, so far they spent $682 billion on net interest, and this is as of June, so 6 months of the year. Let's do our calculation again. So our initial calculation was 972 billion. Okay, but if we take 682 and project it for the rest of the year, so times 2, because that's exactly 6 months, $1.364 trillion. That's insane, guys. I mean, again, this is how much they've spent on health. This is how much they spent on national defense so far this year, and how much they spent on Medicare. So net interest is more than either one of these large line items on the national budget. I'm not even talking like income security, veteran benefits, all of that good stuff. So the only item that's higher than the interest is the Social Security, which is like pensions for retirees. But at the rate we're going, we'll be giving away more money in the interest than we're spending on Social Security. That is freaking scary, guys. And so here's, actually, this is a pretty bad tool. We're not going to use it. So next, we're not going to use this one. This is the interesting one. So now I'm going back to federal spending and interest. So to pay this interest, guys, so we already have a deficit of like $2 trillion. And so on top of that, they're spending about $1.3 trillion in interest alone. That's just interest. And they keep borrowing, so the interest will keep going up. And that comes out of our tax dollars, guys. I mean, like, the people already have, hard time paying for rent, paying for mortgage, paying for food, gas, all of that stuff. But on top of that, the government will be taking more and more money in taxes just to cover the interest that they have to pay, and therefore we will be left with less money. And because they keep borrowing, this interest will keep going up. And so now I want to look at this. This is from New York Federal Reserve. So again, official data. And so let's take a look at this. Now, the first chart is basically personal debt versus and housing debt. Okay, so that's personal mortgages and other personal debt. So right now, Americans owe almost $5 trillion, and that's as of Q1, so March 1st. The numbers probably are now higher, but let's take a look at the breakdown of the non-housing debt. So here's what we have. Other loans, $1.6 trillion. The car prices keep going up. Now the average price of a new car is like over $40,000. And to finance that, let's take a look at a car financing calculator. So here I preloaded a new car. All right, so when you buy it, let's say you put a down payment 10%. So the purchase price is $40,000 with down payment of $4,000. That's $36,000 that you would finance. APR 6%. You could get it, but a lot of people will have problems with that. So let's say that your credit score is between 700 and 720. So here's the sales tax, you have to pay that, and registration and other fees. So let's calculate it. So your monthly payment would be $634 to finance this car for the period of 6 years. Okay, so let's say your interest is more realistic at 8%, because mortgages right now are at like 7%. So now you're paying $672. Okay, so that's not a huge difference, but guys, $672, you have to earn $1,000 per month to make this payment after all the taxes, state tax, local tax, the Social Security, Medicare, all of that good stuff. You have to earn $1,000 to pay $672. So it's expensive. And so if we go back here, that's why we have $1.6 trillion in other loans outstanding. And the foreclosures on those cars, the repossessions are rising, so that's not good. But the credit card, you know, people keep spending in basically 5 quarters, 15 months. The amount of credit card debt right here, so Q4 2022, that's basically the end of 22, beginning of 23, was 0.99 trillion, so $990 billion. So it went up by $120 billion. That's more than 10% in just basically 15 months. And also, what they don't report here is buy now, pay later. And nobody knows the, you know, the default rates on buy now, pay later. And now people pay their rent. They pay for their groceries with buy now, pay later. And a lot of them cannot afford it. And so, like, basically what this all shows, like, student loans is going down because Biden keeps trying to do like some kind of student loan forgiveness. But once that's over, his student loan forgiveness programs, once they're taken out of the equation. Now, I remember time when a good college would cost you like about $40,000 with room and board and tuition. And now, if we take a look, let's take a look at Harvard. Let's not do Harvard. Let's do something like, you know, NYC tuition. A lot of people go to NYC. Not many people get. Not NYC. NYU. Yeah, NYU. NYU tuition, $60,000, and I'm not sure if that includes room and board, cost of attendance. Right here. So off campus, on off campus, you're basically looking at $90,000 to go to school. And if you live off campus, if you just like commute and whatever. Now this includes food. No, actually, yeah, that includes. That is weird. No, that's just food, because if you're off campus, you don't need housing. So off campus, if you live somewhere else, but keep in mind you have to pay rent somewhere else. So basically it is the same thing. So you have to pay almost $90,000 to go to NYU. And people, you know, the kids grow up and they send them off to college. And that's the situation with most 4-year schools today. It's not just NYU or Harvard. A lot of schools, except for state schools, those are cheaper but also expensive. You would be paying probably $45,000-$50,000 in a state college, and for an in-state student. Out of state you pay more. And so when you include books, supplies, transportation, personal expenses, whatever, $93,000 to go to college. You multiply that by 4, you end up with like $380,000 at the end of your 4-year degree, and a lot of people end up working at Starbucks. But whatever. So back here, this keeps going up and up and up. Again, just like 10-15 years ago, this number was about $65,000. It went up in 15 years by almost 50%. And guys, it's not going down. So with all that said, the economy, yes, the stock market is roaring. Like, again, let's take a look at S&P 500. So we're on the brink of making another all-time high. So yesterday it was like almost 565, and today it's 564.50. So we're almost there, almost breaking new all-time high on the stock market. And we're talking about. Now, here's the thing. I actually didn't finish recording the video yesterday. I started on Monday. Today is Tuesday, so it's another day. So IWM, Russell 2000, let's take a look. I think it's just made an all-time high. Let's take a look at 5 years. No, it's not all-time high yet, but it's basically getting there. So amazing run from October of last year, 162 right here at the bottom, 160s, and now it's 224. Okay, the stock market is roaring. Let's look at NASDAQ. QQQ. This puppy is breaking all the records. So QQQ is sitting at $500. So the stock market is doing great, but the underlying economy is not doing so great. There could be a recession coming soon. The expectation right now of federal rate cuts is almost certain in September. So let's take a look. Okay, so here's the Fed Watch tool. So for September, the expectation 93% that they will not cut. And if we look at September, for July, expectation they will not cut. Okay, that's coming up in a week basically, on July 24. But now September, there's a 93% probability that they will cut rate by 25 points. So, and then if we look at November, 60% expectation they'll cut again. And in December, there's a 55% probability they will cut 3 times this year. Okay, so here's the thing. Fed does not cut rates out of goodness of their heart, guys. So in this chart, you can see the gray bars right here, right here, right here. Those are recessions, okay? And so you can look over here. They cut rates, and that means recession. They cut rates, it means recession. Over here, they cut rates, and there was a mild, very small, no, actually, that's not a recession. I don't know why there was no recession here, but they did cut rates. Over here, they cut rates, there was a recession. Here, they cut rates a little bit. There was a bad recession. The inflation spiked up again. So the rates went up, and then they cut them again. So here, the same thing. They cut rates. There is a recession, 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 recession. So, and we're sitting on a very elevated rate right now. So it was almost zero in 21. So right after COVID, and for the longest time before COVID, it was it was near zero. It started rising over here right before COVID. But they started cutting it. Then people got unhappy. They raised it a little bit. COVID hit, boom, down to zero. And so we're sitting on 5.33% in overnight rate right now. And guess what? Everybody's expecting a rate cut. And how does that usually end up? Usually ends up with a recession. When that happens, we don't know. But guys, there is an almost 100% certainty we'll have a recession now. This right here and this right here are basically the only outliers when they cut rate and there was no recession. So it's close to 100% probability. And these cuts right here, this was what? From 5.75 to 4. That was 1.75%. People are expecting 2% rates now. So that's 3.5 points they'll have to cut, 3.5%. So that's a most likely recession coming up. So while we don't have recession, the markets keep going up, and so the question is, what do you do? And in this video, I don't give you investing advice. I'm not an investing advisor. I don't have any licenses, but I'll tell you what I do. So before I go exactly what I do, I just want to mention that I'm not a financial advisor, and I don't recommend anyone do what I do, things like I do, because your investing is your investing. This is just what I do. Okay, so there are several stocks that I like, and I think they will perform amazing, they'll do great, and so I invest in those stocks. So those are outside of my dividend portfolio, because I also have a dividend portfolio that I collect money from, I reinvest, and I have some income funds with yield marks. If you watch my videos, you'll see a lot of yield marks content on my YouTube. Anyway, so the companies I like are Palantir, Tesla, Coinbase, and SOFI. And there's a few others, but these are the ones that I really like and I have a rather large exposure to. Okay, so Palantir, I did not believe in this company. In fact, over here in May, I was shorting it, and I lost a bunch of money all the way up to here. Now let's take a look. It's better to see on the price chart than total return. So over here, I was shorting it, and I lost money, and somewhere over here I started actually buying it because I changed my mind on the company and it paid off well. I actually started buying in a $14 range. Okay, and then eventually what I started doing is not only buying shares, but also because I felt that company was fairly cheap in this range over here. So this is before the stock jumped like 25% or 30% on the earnings. So I was buying it in this range. I was occasionally selling covered call, but never got exercised, so got a little bit of money back, and I started buying covered calls. So here's my covered call right here. I bought in August 23, so almost a year ago. I bought a $10 call, so it was in the money. I paid upfront $6.40. I think at the time, if I look back here, so August, it was in the $14 range. Okay, $14.50, give or take. So let's take a look at 1 year. This is actually much better. So August right here, 20 something was like under $15. Okay, so I paid $2 more for covered call expiring basically end of this year. So at the time I was like 15-16 months away, and this is called a leap or a call option. So I bought a $10 call for $6.40. I put $6.40 up front, and I held on to that call option until yesterday, and yesterday I exercised it. Now a lot of you will say, like, why would you exercise? You have extrinsic value. But because it's now so deeply in the money, The market value of it was right here, almost $1,900. I was up 1250 on it, 1253 on it, so 200% return. But if I sold the option and bought the shares, I would have to pay taxes on this 1200. And the difference between the price of Palantir yesterday, it was 28.58, and the option value was 28.93, including the $10 intrinsic value. So that's a difference of like 40 cents, 35 cents. So for to save $35, that's basically less than 1.5 share. I would have to pay taxes on and this is short-term gain because it's less than a year. So I would have to pay like, let's call it 40% tax on $1,200. So you clearly see why it didn't make sense to to sell the option, and I just kept that. I just exercised it. So basically, my cost for this 100 shares is $1,640 because again, the strike price is $10, but I paid $6.40 per share to buy this call. So $16.40 right here, break-even price $16.40. Okay, and then in May of this year, basically after the earnings, so see before the earnings stock ran up, and then it was good earnings, but for some reason it dropped like a lot. So here it closed May 10th, it closed at 2060, and so toward the end of May I bought more calls. So I have 3 calls right here. So you see they bought 521, so that's a couple of months ago. When the price of a stock that I like goes down, I buy Libs. So now this one expires in January of 2026. So we have a year and a half until expiration. And now if I hold it long enough and still have extrinsic value in it, which is pretty good, I might actually sell the option. But I think what will end up happening, I'll just exercise it. So this one is at $13 at the time. So see 521. Let's look how much the stock was trading for. 521. It was $21.24. Okay, that's the closing price on that stock. And so I basically paid $2.40 premium to secure 300 shares of Palantir. Okay, for 3 years. And already these 3 contracts are up by $2,000. And I could sell them today, and I would have to pay like $800 taxes on this. So I'm just gonna hold it until 2026, pretty much. And then once there is very little extrinsic value left in this stock, I'll just probably exercise. Now, the way I look at it, I don't know the price action of Palantir. It's all over the place. You can see right here, it goes up, then investors for some reason get disappointed. Although it was a great quarter, it drops by 20% over here. Like, whatever. I know it's a good stock. I know it's a great company. They have bright future. I think in 1 year it will probably be over $40. Right now it's like $29 almost. Yeah, almost $29. And again, in the beginning of this year, if we look January 1st, right here somewhere, we gotta look at the not total return, but price chart. Wow, it was like ridiculous, $16.58 when the market opened after New Year. And so it ran up a lot. Let's take a look at Palantir, how much it ran up. Year to date, it's probably up 60-70%. So let's look at year to date. Yep, I was correct. 69% up on the year. And I am... So here's my mentality. I want to make some money while I keep the stock, so I sell way out of the money calls on them. So I want to make some, some profit, call it, options, dividends. And so I sold $39 and $40 calls expiring in December of this year, January of next year. And I am actually worried that it might reach $39, $40. And at that time, I don't know what I will do. I will let them get assigned, or I maybe roll them for up and out. I don't know what we'll do. But at this point, if you look at the options on that thing is like right now almost $2 for a $40 call expiring in January of 25. So you can collect $2 per share and secure a $40 strike price. So I collect a little bit of income on my shares as I go along. Okay, but my goal is to keep the shares, not to have them exercised. So that's Palantir. And so why I like Palantir, look at this, look at their They have $4 billion in cash and virtually zero debt. 163 million in debt. That's like, peanuts. They can pay it off right away. I don't even know why they have that. Okay, look at the earning, the revenue growth. It's a hockey stick up. 1 year revenue growth 21%. So if they get to 22-25% revenue growth, this stock will be at $40. For the longest time they've been unprofitable, but they had 5 profitable quarters in a row. So that's GAAP profitability. Now they're eligible to be part of S&P 500. So once that happens, the stock will probably gain another 10%. And just in the last few days, like, it was still trading at $21 a couple months ago. It was trading over here. Let's take it June, $23. So actually, and there were moments when it was below sub $22. So I, slowly buying a few shares here and there. If there is a huge pullback, I'm just going to buy more Libs, because these companies, I believe in this company. They have commercial revenue. Let's take a look at the revenues breakdown. They have commercial and government revenue. Government is not going anywhere. They're signing up new commercial clients like crazy. They're doing their AIP boot camps. And so here is the estimates for this company, EPS estimates for this quarter. They estimate 8 cents, and in a year 11 cents. I think it's actually going to be higher. So here is the estimated revenue for the company. So in 1 year they estimate 756 million in the first quarter of next year. And so actually that's second quarter, because that's the beginning. This date is the beginning of the quarter. So this is second quarter. I think it's actually going to be higher. They just secured like randomly, about $500 million in new contracts within last month or so. This company is growing like crazy, and I think they will increase their growth this quarter, and probably for the year. Soon they will be earning like close to $1 billion in free cash flow per year. Like if we look at free cash flow, this quarter they had almost $300 billion. Over here 126. But I think soon enough they will be at $1 billion free cash flow. They're slow. I think they're already buying back shares now. You can see there's dilution, and I think that's because of the right here. So they're basically stock-based compensation is almost last quarter almost the same as free cash flow. So that's how they're paying their employees. But the good thing is that it's actually going down, trending down. Well, this one was kind of an increase, so that's not a good sign, but whatever. It's small potatoes. The company is growing at a very rapid pace. There's great future for it, and I just believe in this company. And so maybe it's overpriced right now, so I'm not buying a lot again. So my strategy is when the stock drops, that's when I buy either shares or Libs or both. I don't buy at the high. And what I do is I also sell covered calls, a couple months out, way out of money. So because I don't want to get assigned on these shares. And so if you look, I don't know why these EBITDA numbers are negative. I think they should be positive. I have to check my software how it saves those numbers. So that's incorrect, but I assume they're positive numbers. They couldn't be negative. So you can see estimated net income is 261 in Q4 of 2025. So basically like 5-6 quarters from now. I think it will actually grow faster. Take a look at this. EBITDA growth, well, because they became positive, net positive. So 5-year revenue CAGR 31%. Lately they've been kind of slowing down a little bit, because like over here they kind of plateaued slightly, but it's increasing very nicely. Again, look at this chart. It's going up and up and up. I don't know why I don't have numbers over here, but whatever. It's going up. The cash on hand going up. The free cash flow going up. So it's just a great company. Free cash flow per share kind of suffering, but it's still in its infancy. And I think like, let's take a look at the multiple right now. Wow, the P, we got to look at the forward P. So let's quickly calculate it. So let's say they make EPS of, so that's net income, free cash flow, EPS of 4 cents per share. They put here. So that's 16, or about 16 cents per year going forward. So let's take our handy dandy calculator, and current price 29 divided by 0.16, 182 forward P. But guys, take a look at this. The estimate for their PE is right here, 8 cents. So that's now half the PE, and I think it's going to be a lot. Let's say they're making like 25 cents quarter. And I think it's coming up sooner than these estimates indicate, because the company is growing amazingly fast. Well, actually, revenue growing at 25%. Yeah, I guess these are decent estimates, but I think it's going to be higher. Now, these are GAAP PE estimates and GAAP PE earnings, because if we look at over here, they show 8 cents already. So that's non-GAAP, and I think that's the number they use to calculate the PE ratio of the company. Well, it's weird how they do it over here. So if you take 8 cents PE, okay, and let's say it will grow by 20%, so that would be, let's say 10 cents at the end of the year. Let's use 0.09 as a median times 4, so 36. So $29 divided by 36 cents. So that's 80 forward PE for the stock. And when it was 22 bucks, okay, which was like 2 weeks ago. So it's not like they've been trading for $29 all this time. It was $22 2 weeks ago. So why weren't people buying? I don't know. I was buying. So $22 divided by 36 cents, 61 forward PE. Is it high? Yes, it's higher than Nvidia and higher than many other companies, but Tesla normally trades at 100 PE. So I think this stock is not, I mean, right now it might be overvalued on the pure, forward PE basis, but it's a great company. So that's why I'm investing in it. And I invest when the price goes down. There are always moments when it goes down. When it goes up, I sell cover calls. When it goes down, I buy leaps. So that's my strategy. And I just, dollar cost average and increase my position. So next is Tesla. Let's take a look at what I do with Tesla. So again, same thing with Tesla. When it goes down, I just buy. In another one of my accounts, I actually have a December 26 call that is up like 150% already, and I bought that, I believe, in April. So yeah, I buy shares and I buy leaps. And again, my goal, I think Tesla will be a $500-600 company within a couple of years, and that's only double from now. Like if you look at Nvidia, so this is the price chart for Nvidia. Let's take a look at 1 year. It was on a split adjusted basis. A year ago it was $48, basically up 200% in 1 year. So Tesla in 2 years up 50% is more than realistic, especially, guys, I mean, they have robotaxis, they have Optimus bot, they have FSD, they have energy. By the way, this quarter energy just doubled in deployments. So, and they have insane profit margin. Now it's still a small portion of their revenue. Let's take a look at their revenue right here. And so can you see here, energy 1.6 billion. So I think next quarter will be like over $3 billion in profit, in revenue for energy. And the revenue last quarter was 21. So that's already like 15% of their revenue, and they have like 70% profit margin, I think, on it. So it's a good chunk, and it's growing. It will grow, and as they build out the manufacturing capacity, their costs will go down and down and down. Like price of lithium is down 70% from 3 years ago, from 21. So their costs are going down, and their manufacturing capacity goes up, and they're not dropping the sales price. So the margins on that are amazing, and they're just energy, guys. They have, so these numbers here, services and other, those are not realized. So they included here in revenue by segment, but they're not realized. So that's why we only have $21 billion in revenue in the last quarter. However, these are the estimates going forward, and let's say a year from now they're estimating 27 billion. So that's 20% growth in revenue. Let's see where they're sitting on revenue right now. So because Q1 was pretty weak, it was pretty bad. They have a negative CAGR on revenue for the year, but 5-year revenue CAGR or growth is 36%. Will they keep it up? I don't know, but very likely they'll go over 20% revenue growth. And they have a very strong cash position. They have very little debt. Now, is it overpriced? Yes. 65 forward PE. Or no, that's not forward PE, that's TTM. But still, I think Tesla has bright future. I think it's a little bit overpriced right now. People got a little bit enthusiastic on the Tesla shares recently, so I'm not buying. Now, when they had a dip like a couple days ago, let's take a look at it. So I bought a couple more shares right over here at 237. It dipped as low as 231. I missed that. I was kind of dozing off. So pre-market they had 231. I would buy a couple more shares, but I didn't. Whatever. So my average, I'm in the green on it. I'm seeing somewhere like over here at 220. I've been averaging down, not enough. I should have averaged down more, but you know, there's always limited cash that you have, so whatever. But I buy the dip, and I buy on the, and when there is a dip, when there is a huge decline in the price, like over here, you can see I bought for 150, 162, 167, 170, 72, even 185. Now it seems like very cheap, but at the time, you know, Tesla keeps going down and down and down. I was a little bit, you know, worried, and I was sitting on a pretty huge loss, like over here, beginning of the year. Let's take a look at 1 year. Like this whole time since New Year, it's been going down, and like basically bottomed out at slightly below 140. That was intraday. The closing price was 142, and so over here I bought somewhere over here. No, I didn't buy over here. I don't remember. Whatever. So I averaged down, and now my position is better. I have more shares. They're in the green. I did sell a cover call for like 290. Now I'm worried about it a little bit, but so far it expires in August. So because they delayed the robotaxi event, now those are that call is safer because it was past robotaxi original date of 8/8 or August 8. So whatever. So I collect a little bit of premium as we go along, and buy the dips, and when it dips, buy the leaps. Leaps meaning long term covered calls. So, and I buy them deep in the money. I don't buy out of the money. Like, yes, you make more money if you buy out of the money covered calls, but my goal, because out of the money, if Tesla price never gets there, if there is a bad recession, you lose all that money. If you buy deep in the money call, especially near the market bottom or the share price bottom, then you kind of secure a much better price, and then like when Tesla skyrockets, you basically, your delta is 100%, so, or near 100%, and like if the price of the share goes up by $1, then the price of your leap goes up by $1, or like 98 cents. So there's very little extrinsic value, so that's only time left on those leaps, but whatever. So basically I buy leaps when the price is cheap. Okay, so the next stock that I like, but it has been doing pretty horribly, except for the last couple days, SOFI. Okay, so let's take a look at SOFI, 1 year chart. So over here it was as low as 617, and then in the last couple of days it went up 20-some%, which is like insane. But I think people realize that it's not such a bad company. Maybe, you know, so SOFI is very interesting. They have, I don't want to do a deep dive on SOFI here. I'll make a separate video on that. But they have basically a banking, financial services, technology, which is Galileo. They power 155 million accounts, and basically all the Robinhood accounts. So if you're logged into Robinhood, then SOFI is making money on that because they're powering the backend for all the Robinhood accounts and many others. So that's Galileo, and it's been growing slowly, but it's growing. And I think they just haven't been priced as a technology company, because they've been priced as a bank, and therefore, as a bank, their valuations are pretty weak. Okay, but SOFI has also been struggling for the longest time. They've been unprofitable. Okay, but the last 2 quarters are profitable, and the management is optimistic about being profitable going forward. So let's take a look at estimates. So here are the EPS estimates. Now this is GAAP EPS now, and so they're estimating 1 cent for this quarter, and SOFI's own estimate for this quarter is 1 cent. And so if they beat it, if they, let's say, come up somehow with 2 cents, maybe they plan to spend a lot of money on advertising this quarter, and so they expect to make very little money, but still they're in the green, and they don't expect to be in the red anymore. And you can see here that in 2 years they estimate 14 cents per share EPS. That's per quarter. Okay, and so go back 2 quarters, so 10 cents, so average about 13 cents. Let's do handy dandy calculation if that happens. So right now the price is like 7.70 divided by 42 cents. So That's forward PE into 26 of 18. All right, that's below S&P 500 PE. And again, SOFI is growing really rapidly. Like over here, they expect, the estimate is for $900 million in 1 quarter revenue. However, what SOFI has been doing, guys, they've been crushing estimates every single quarter. Like even on the negative side, they were crushing. Even when they were losing money, when they were still unprofitable, they were still crushing estimates. Now, you can see here, they always beat estimates. This one, now, so Robinhood has a tendency to show not GAAP EPS, but like some other metrics, but whatever. So their GAAP numbers are kind of higher, but they beat the estimates every quarter. So if you take this and you increase it by say 20-30%, which is their typical beat on the estimates, we're already at 20 cents, and that puts us at like 12-13 P going forward. And so yeah, you see the estimate basically this is their net income, $88 million. So the street estimates is that in a year they won't reach that number, but they're already there and they're going to do even better. So I'm really happy with SOFI. Again, what I do with SOFI is I buy LIPs now. My LIPs on SOFI haven't been doing that good. I actually have some $7 and $10 LIPs expiring in January 25, and the $10 are underwater. I have a pretty big loss on those, but whatever, I'll show you the good ones where I'm winning. And again, these numbers were much higher because the price of SOFI has been all over the place, but like 9 months ago, it was like over here in August. So that's like a year ago. It was like $12 and now it's $7.70. So maybe I should have sold my LIPs back then, but you never know. You never know what's going to happen. And over here, I think it also broke through $12. It just didn't close there, but intraday it was like at $12, $11.99. So if I sold my long, high priced LIPs back then, I wouldn't be worried about it right now. But anyway, so the SOFI price is improving. The shorts are covering because now they're losing their shirts. Yeah. However, the SOFI is weird stock because during the earnings calls, the management just basically like, yeah, they don't pump the stock, they just very conservative on the earnings call. And so what happens often after earnings, the stock just tanks. Like over here, it was at $12 intraday, closed at 10.30, but then like after earnings, the stock just drops. And that's the good thing is the CEO keeps buying and buying and buying shares himself, and he also buys on the dips. He doesn't buy it at 12. He bought over here at 650. He bought in this range. And so now I already have a pretty good position on SOFI, so I didn't buy many shares. I bought like maybe 150, 200 shares, but I bought some additional LIPs into 26, and again in the money LIPs. So what happens with the in the money LIPs? Let me show you. You basically pay a little bit more than the price of the stock at the moment. And so I have 26 $5 and $4 and $3 LIPs, or long dated calls in the money. So I pay a premium of maybe $1 to current share price, but I secure like 2 years or a year and a half. So at this point you can buy June 2026. That's 2 years. You basically, for paying $1 more, you're securing 2 years of potential price appreciation. And then those LIPs, they skyrocket and you make money. Like even over here, I am up on this. My break even is, so there's 5 contracts, break even 623. So that's $1.55 difference times 5. So I'm up like $750 on this position here. But at some point I was up like several $1,000s on this. And I still have 6 months left on this LIP. And if anything, I'll just exercise at my break even price is 623, which is a pretty good price. It barely dropped below it. Like the 52-week low on SOFI was like 617, 630, yeah, 615 right here. So I would be like, the worst that can happen, I would be at 52-week low. Now the stock could go down from here if they tank on earnings, whatever. I mean, long term, I believe in this company. I like it. And so the final one is Coinbase, and I've made a few videos about Coinbase now. And what's interesting with Coinbase is when crypto bull run happens, they make crazy money. Like over here, you can see they made $4.40. Let's take a look at Coinbase. And now again, Robinhood does not report GAAP numbers. Sometimes they do, sometimes they don't. So right now it's, wow, 252, amazing. So here their estimate was, I don't remember, it's weird, but they changed their estimates on the day of the earnings, or like basically as earnings come out, they change their estimates. And this $1.65 for last quarter, that is their free cash flow, $1.69. Okay, free cash flow per share. However, EPS sits at $4.40, that GAAP EPS. However, what the part of that EPS is because they mark to market their crypto holdings, so they don't sell them, but they include the potential gains if they sold it into their EPS. So I think in case of Coinbase, it's actually, I mean, it depends like quarter to quarter. You don't know if they sold their crypto holding or not. But over here, the actual EPS, the actual earnings per share or free cash flow per share was $1.69, and you can see they've been, even like though there was like a crypto winter, they were still free cash flow positive. Now on the EPS side, they were negative, and you know, you gotta look through their financial statements to really understand what it is. I don't want to spend time right now deep diving into Coinbase accounting. They have a rather large stock-based compensation, which is what I don't like, but they earn that much money just from staking fees or close to it. Like over here, the staking fees they collected was about 100 million, and just a little bit more they paid in stock-based comp. That's on top of all their other earnings. They have many of them, many different positions where how they make money, institutional trading fees, then private, you know, like regular customers. Well, actually, we can look over here. This is the breakdown. So subscription, whatever, small potatoes, banking service, subscription and circle. I don't like this breakdown. Custodial fee just 32 million. Other 16. I don't like this. Whatever these numbers mean, I don't really understand them. So what they call bank services, consumer net, that's their trading fees. They basically charge you a fee to trade crypto on their platform. So the thing is with Coinbase, and again, you gotta look at them as, you know, you gotta buy the dip. Now let's I already kind of talked about it in my previous videos on Coinbase specific, but when they were like at $32, I was buying their shares, and then when it ran up to like $50, I'm like, it's not going up higher anytime soon. Now remember, this is like still right before the ChatGPT thing came out, so I sold that position. But that was in my trading account. I also have a holding account where I bought right over here at IPO. I believe in Coinbase. To me, it's the only place where I would actually choose. So basically, when the FTX thing happened, when they, you know, basically stole $20 billion of customer funds, I was nowhere near that thing because I don't trust any exchanges except for Coinbase. I was not on Binance. No, that's not true. I was on Binance. I had some, poop coins that I was mining, and then like Binance was the only place where I could actually trade them for some other poop coins. But other than that was like, I don't know, small potatoes, like $200-300. And then when US government required them to do KYC, they created Binance.us, and basically they screwed me over by like not just basically blocking the ability to withdraw the coins. And again, it was just like $200 worth of poop coins, so I wasn't holding or trading there with, US dollars or anything like that, because for me the only reputable place is Coinbase. It's the only reliable and secure place, and that's why all the large Bitcoin ETFs use them as custodian. So the BlackRock ETF, Bitcoin ETF, IBIT, uses Coinbase as a custodian because they're the most reliable, the most trustworthy crypto exchange and crypto custodian. And that's why, for me, I knew that back at IPO. No, in retrospect, I shouldn't have bought it at IPO because that was $380. I'm still sitting on those shares, and at some point over here, it was really painful to watch it, but I never sold. In fact, I accumulated over here. It's like $75 and at $70. And over here, I was trading it, so I don't even include that. And what I did over here in the first year of Coinbase, I sold cover calls, way out of money, like $450 cover calls. I never got to that point, and so all that money that I collected on the premiums, now I include that into my cost basis, and I'm sitting at $150 cost base per share. 149, and so yeah, I'm in the money, and I still sell out of the money covered calls. Now in retrospect, I should have bought Libs over here like crazy, like 2 years out, as far as you can go, even over here at $50. But for some reason I didn't believe, because the Bitcoin was still like 15,000, less than $20,000, and I just didn't believe that it's going to go up just yet. I was expecting recession. Everybody was expecting recession. Nobody thought there will be like a ChatGPT thing and an Nvidia moment. But the stock market took off, and so did Coinbase. And I sold covered calls over here, you know, for like 210, because that's above my cost basis. But then like I started rolling them over here. I rolled one of my covered calls into August, okay, from March to August. So at the time that was a 320 covered call. The cost of that was $35. Now I didn't collect $35 because I had to roll my previous in the money covered call, so I only collected maybe a couple dollars. But let's say I sold that for $35. I just bought it back for 50 cents or 60 cents. Okay, so covered calls is very profitable strategy, and the way I look at Coinbase, it's very funny. So it's very volatile. When it goes up, I sell cover calls, and when it goes down, I buy them back for you know, like maybe 10% on the dollar, 10 cents on the dollar. And right now it's going up. I think we'll go up to 270 unless we have like the next leg of the Bitcoin bull run, like 87, 100K. If that happens, Coinbase will go to $400. And at that point, I will sell as far out as possible leaps for, you know, the maximum. Like for like 500, 510. And at that point, you would be able to collect like $150 per leap. And if I get assigned at $500, I don't mind. However, I think that by the time those leaps come to expiration, there will be a next crypto winter, and then Coinbase will be in the $150 range again. So that's my strategy on Coinbase. I don't accumulate any more shares. I have an overweight position in Coinbase because I was buying over here, and so at the time it wasn't overweight, but now because the price went up, so I bought some shares at 71 and 75, and so now it's 250. That's up by a lot, and so now it makes the position overweight. And therefore I'm not acquiring any more shares, but I do play the covered call games on Coinbase, and I expect it to drop again to $100. It could drop again to $100, and that's when I will be buying leaps. I've learned my lesson. So when it runs up, sell the calls way out of the money, because Coinbase is crazy. You never know when it's gonna jump $50 in 2 days. You know, if we look at Coinbase, let's take a look at 1 month thing. No, let's look at 1 week. So it's up for the week by 13%. Yesterday was up by like 11. If we go from here, unfortunately we can't go less than a week, but yeah, it's a crazy stock. So I don't want to get assigned on my shares, but if I do, I'll just start selling puts, you know, in the money puts, reduce my my cost and collect money, because I know, well, I don't know, but historically speaking, because I've been holding Coinbase this whole time since IPO, since well, it was never 250. Maybe some people got lucky at 250 over here, but I got lucky at 380. But I've already observed it, you know, together with the crypto cycle. Crypto goes up, Coinbase goes up. That's when I sell covered calls, and then there's crypto winter, and I guess you just wait until it drops, and that's when you buy either the shares or the leaps. And so next time there's a big crypto winter, I'll just buy a crap ton of Coinbase leaps as far as possible in the money, and then there will be printing. Like imagine you bought leaps over here, you know, at $35. They are right now, let me take a look. So if you bought the $35 at the money call at the time when Coinbase was at its bottom, January 23, okay, today that call is worth $218. What is that? Sixfold, 6x your money. And so there will be another crypto winter, there will be another bottom on Coinbase, and at that point, like, you could probably buy, and at the time that call cost maybe like $5-7, let's say it cost $7, so that your $7 would translate into $218 right now. So, and that is let's do the math. I'm not sure if it was 7, but you know, given the what I know about Coinbase, maybe it was like $12. Let's call it $12. So 218 divided by 12, you would 18x your money. Yeah. So there will be another crypto winter. Coinbase will be below $100 again, guys. It's not a probability, it's an almost certainty, because when there is crypto winter, yes, they're diversifying their income streams. They have a Coinbase wallet now. They have like the base platform, and yeah, but still, when crypto goes down, they make much less money, and likely they're losing money, so the stock goes down. So I expect the Coinbase will be under $100 again. 35 most likely not, unless we have a really bad recession, like JFC style. But yeah, the strategy is buy low, sell high. It's easy to say, but with Coinbase it's more or less predictable, because crypto bull run, it goes way up. That's when you sell covered calls, long dated, way out of the money, in case the crypto bull run continues into the expiration. But still the premiums are insane. Let me show you the premiums. So let's take a look at December 26th. Okay, so if you sell a $500 call or 480 call, you can collect today $67. And by the way, that was about $100 in March. So if I sold the call like that in March, I would collect $100 up front, and then secure a really nice strike price, which I am almost certain it will not reach, because by December 26th there will be most likely a crypto winter, because crypto goes in stages. Look at Bitcoin. Yeah, Bitcoin will be high. Okay, it will probably go to 250 within like couple years. Okay, 3-4 years. But let's take a look at it. It goes up and then it goes down. Now it doesn't go to previous lows, but it still drops by a lot. And right now I think we're still in this period right here, so probably, like it dropped a little bit, recovered. In part it recovered actually because of Trump shooting, because it was $53,000 a week ago, now it's 65. If you look at 1 week, right here was look at 1 month. So a couple weeks ago it was below 53, it was below 54, 53, and in 2 weeks it recovered $12,000. And a large jump right here because of Trump shooting. When was it? On the 13th. So after the assassination attempt, it went from 50, call it 59 to 65. So that's a 10% move, maybe even more. Yeah, so about 10%, 10-12% move from here. Yeah, 12. Is it sustainable? I don't know, but whatever. Bitcoin just like goes up and down, and if you have patience, you catch those moments. Now I'm not directly investing in Bitcoin, because you cannot sell call options on Bitcoin, at least not easily. You have to go to futures, and I am not into futures. You need to put a lot of money, and for me it's just easier to own Coinbase stock. It kind of moves with Bitcoin, not exact proportion, but still. And you can sell covered calls on it, and that will significantly lower your cost basis. But again, you gotta catch the moments when it's down. So that's my strategy. I am not saying that it's correct. Right now the market is roaring, it's booming, and everything is good. But SOFI could be sub $4 again, or well, it was never sub $4, but it was close to $4. And they were talking about reverse splitting the stock, because they're required to have a minimum price of $5 for a certain number of months. Otherwise they either get delisted or they do reverse split. So over here there was talk about either delisting or reverse splitting the stock price or the shares, and that was a real worry at this point. This was the bottom for the shares, and I was accumulating here, and so was Anthony Noda. But if we have a really bad recession, SOFI could go to $3. It can. Tesla can go below $100 if there is a bad recession. Palantir could go to $12 again. Right now it's 29, but with a recession it could go really down. Now, what's good about Palantir is the commercial clients, they really love their product, and they extend and they sign up new clients. But they also have government revenue, which is also growing. You can see 335 million this year, and they just signed up for the Titan project. That's like, I think it's over $1 billion total, and they received like 450 million up front. No, that was another contract where they received more than 25% upfront payment, because usually they're spread over a number of years, but here they received, I think, like 40% upfront. Whatever. I don't remember all the numbers in Palantir. I want to do a separate video about that, where we actually talk about details of AIP and boot camps and all of the good stuff. But their government revenue is stable, so I don't think they will drop really badly. They're profitable. They have a lot of cash, so even if things turn sour, it's a company that will be around for a very long time. They can sustain themselves and be profitable. And even if they just break even for a year or two, eventually they'll come up victorious. So I'm not super worried about it. Like, yeah, it doesn't look good when you're down 30% on your portfolio, but not the first rodeo. So to new investors, don't panic, sell. If you don't believe in a company, then why did you buy it in the first place? If you do believe in company, then it's better to buy the dips and probably increase your dip buying, because then you improve your cost average. And that's what I do. So those are my strategies now. I do expect a pretty bad recession because our economy is just not doing super great. Like, on the surface it's doing well, but the problem is that Biden has been trying to get reelected, and he was doing basically everything he can to prop up the economy, and that includes hiring millions of people for useless government jobs just to keep up the unemployment rate. But even with that, the unemployment rate is now 4.1%, and that's an indicator that if it keeps going up, that's a strong indicator that economy is going to collapse, because you can only create government jobs so long, because with a $2 trillion deficit, and eventually they just run out of money. I mean, like, yes, they can print more, and the inflation will just increase again, and eventually that thing either has to stop or there will be some kind of revolution, and you don't want a revolution, guys. So they'll do something just to keep the plebs happy, but it's in my mind it's almost inevitable. They just kept like, everybody was expecting recession in 23, but with the injections of new capital they could prop it up long enough to stay afloat. But most likely at this point Biden will lose elections. I mean, like, how can you vote for a guy that calls Putin the president of Ukraine and calls his VP Trump? I mean, the guy is just not capable. And even if they elect a Democrat, somebody else, I don't know who, it's better than Biden. I'm not saying like you gotta vote for Democrat or Republican. That's not the point of this video. The point of this video is Biden is toast. He's done with the elections. I don't see how he can win without faking the elections results, because like his ratings are below floors, and like, who in their right mind would vote for a guy who can barely speak, who will finish the Medicare? That's basically his election message. So yeah, but the reality is that they've been injecting money into the economy, money we don't have. That's why we have $2 trillion deficit and insanely high interest payments. And even with all the hirings of government employees that don't produce anything, don't do anything, just collect the salary and don't even show up to work. Now, let me talk about that real. So check out this video. I will link it in the description, but we'll just check out the first few seconds.
A new study finds that just 6% of government workers actually come to the office. The other 94% are pretending COVID's still going, or perhaps never really worked in the first place. Meanwhile, a separate study finds government workers make nearly 40% more than the private sector workers, who are footing their extravagant salaries for apparently staying at home.
So bottom line, guys, you can watch this video on your own. I'll link it in the description, but at this time the market will keep going up. That's my prediction until the elections at the very least. And so I want to catch up on this move, at least in some way, and so I'm selling covered calls out of the money, not all right away. I kind of stutter step it, and I think we'll have a big recession. So that's when you load up on super long in the money, or even out of the money, or at the money. But when the stock price goes really down, but you believe in the company, I will be loading up on calls. I'm beefing up the cash reserves. I'm waiting for the drop, and this time I want to take advantage of it. Anyway, this was long enough, guys. Good luck to everyone. Don't forget to sometimes take profits, because the paper gains, they don't materialize unless you have that in your bank account. I'm not telling you to sell, but maybe take some earnings or profits off the table at some point, because my view is we will have bad recession at some point. They will try to keep it up, and Trump, if or when he gets elected, he will also try to keep it up. I don't really know how he'll deal economically with the problems that are left from current administration. I don't know, but whatever. I think recession is inevitable at this point. So anyway, good luck to everyone, and I'll see you in the next video. One quick thing, guys, please subscribe to the channel. It will really help us grow, and thank you for everyone who watched this far. So basically, to show the companies I like, we're using this DRIPCalc Pro software, where you can compare all the metrics, or like research all the metrics visually, where you can see all the earnings, revenues, earnings per share, breakdown of the revenues, as well as estimates for the revenue, EPS, and all of that good stuff. Here are also some ratios for each company that you research. So we are actually offering a discount, lifetime discount to all the new members from the YouTube, because we recently launched that and we want to have as many subs for the software as possible. So we'll leave the discount in the description as well as pinned comment if you want to check out the software. And again, help me, like this video. I would really appreciate it. It helps the channel grow. And with that said, enough talking. I'll see you in the next video. Bye.